Hi everyone, thanks for tuning in. I'm Crypto Vatsik, and I would really appreciate it if you hit that like button to support the channel. And if you find this content helpful, please don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice and are my opinions only. Okay, let's get into it. For this video, I'm going to provide a quick technical analysis on Doge and APE. I guess you could say more type of the meme coins, but anyways, the chart still can tell you things even on coins like these. They have you can't deny that they have potential. So whether you're trading it or you're looking to accumulate, I think this video will be helpful for you. So with that said, let's get right into it. So when you start to get a chart that looks like this, right, we're just basically clearly in a bear market, in a clear downtrend. This is your more typical bear market that we've seen on 2017, 2018 bear market, Bitcoin and Ethereum, where we just had these steady declines of lower highs and lower lows kind of thing. And there was lots of opportunity in these Bitcoin or bear market rallies, right? I mean, we had multiple opportunities to scalp and trade, short-term swing trades, sort of thing, to make profit on the downtrend. But you couldn't deny that the trend was down, right? So typically you want to be trading with the trend and you try not to fight it. But when you start getting down to these really low levels where the volatility becomes less and less, and it just starts to eventually kind of flatline like this, really all we can do is start to look left for those critical levels because they're sometimes a little bit harder to see. So basically for me, what I'd be doing is I'd be zooming out first on a high time frame to find some key levels, right? So I'm on the weekly chart right now, and I'd just be looking at basically our next obvious point, which is right around here where we had this bullish consolidation here. So I'll just mark it out on the chart. Okay, so clearly you can see here, I've just marked out from the swing high to the swing low, excluding the candles, that we have our range here, right? And so basically what I'd be doing is marking this out and then essentially just be dragging it over, and that will give us our key levels that we're currently playing around in. But quickly before we get into what we're seeing right now, let's just go back and zoom in on a lower time frame and see why these levels are critical and what happened at this point. Okay, so this is now zoomed in to the daily time frame on that previous bullish consolidation that I was mentioning, right, back in 2021. And now we can see from the weekly when we marked it out that here is our critical range that we had, right? So we had our high to our low, and this marked some pretty key areas around the equilibrium here, right, as resistance, 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 down to the bottom band as support. It actually was a shortfall here. It actually didn't quite come back down to this lower band on this retest. It is a retest. But however, it doesn't actually come back and touch the bottom band, which is a bullish signal or just a sign that the trend is gaining some strength, right? So same thing if you're coming up, same thing if you're coming up here, and you were kind of getting some bearish action like this, and you touch, and then you come back up, and then you failed, right? And then you didn't actually come back up and touch the upper band. Just as an example, here, one sec. As an example here, right? So basically it's a shortfall. So just would mean that the trend here is gaining weakness, and that the trend is starting to fall downwards, right? So anyways, just a side note there. But anyways, we came back up as resistance and huge wick, deviated above but failed, closed below it, and then then we basically got our bullish consolidation within this micro time frame in here, and then we smashed right up through. So this overall area I'd consider is bullish consolidation because it only lasted maybe a month or two kind of thing, and it really didn't break this bottom band and hovered in this range. So that led us to our extreme move above when we had our bull market and everything else was pumping, right? So this is kind of forming, at this time, this formed this range, but now why it's so significant is because it's formed that kind of that base range that I'm interested in. And basically what I mean by that is when you look left, when you're coming down like this, all you can do is look to previous ranges and target the next, in theory, target the next likely range below, right? So all the way down, you'd basically be doing that, right? You'd be taking these key levels on a high time frame and just marking out these areas of swing highs and swing lows. And so basically that would give you your previous ranges that you had on price action that you could then form a trade thesis on, right? So basically you just keep looking left to those previous levels, and then we just continued downward, and you could just continue drawing these swing lows, right? These basically all these swing lows to these swing highs, and they just give you this continuous ladder down of ranges, or this laddering down of ranges, right? So just continues down, right? So here, swing low, swing high, came back up to the EQ, actually wicked up to the top, came back down, hovered around the bottom band, broke below, bearish retest, same thing, came back down, swing low, swing high, came back down, deviated below, EQ's resistance, although a couple wicks up to the upper band. Sorry, it's a little zoomed out here, but basically then a failed breakdown below that, and then continuously just making these same swing low, swing highs, and now we're inside that range, that base range, that previous range that I had drawn out, and so that's all we can use at this point. So what I'm seeing right now is basically, if we zoom in on this range, let me just pull up the daily. Now we're seeing that previous range from this previous area just on current price action. Okay, we had hovered around the upper band with a bearish consolidation. Okay, this is your classic bearish consolidation here, and it did give us a range from our swing low to our swing high, so we'll take it here, okay, and take it down to this wicks, right, basically where it broke down from, okay, and it's respected that now as resistance. Yes, we had this temporary breakthrough up here, but really it just came back up into this tapped supply right here. So essentially just tapped this supply, this liquidity, came back up with this high right here, right, and then obviously failed back down. So that is, how I think we got to where we are right now, and we're in this previous base range now, right? So we'll get rid of this again, just go back to that base range that I'm talking about. So we're in here, we played around the EQ as support, and then as support, kind of, had mixed feelings. Doge had mixed feelings here at first. So, and basically is breaking down below it now. And so, your expectation would be you'd want to target kind of the lower area of the band if you're going on a lower time frame, short-term swing trade kind of thing. Maybe another bearish retest to get an entry kind of thing. But I mean, on a higher time frame macro sense, there's just no reason for me to get bullish on this one yet. And the reason for that is because we're still clearly in a downtrend. You could say this is still just a lower high of the overall trend. And until Doge gets it back above this range and clearly identifies this area above the upper band of this range, and I know this is quite a large area, but until we can get it back above here and establish this area as support, as our new base, because right now our base is down here at this macro low within this range, right? But if we can establish a new base up here and have a key SR flip of this upper band, meaning its resistance, and flip it into support, then I will consider getting bullish, right? So if we can do something like this area is where I'll get interested again. But until that happens, there's just no reason to assume a trend reversal, right? Essentially, you're assuming a trend reversal until you have this happen. You need confirmation of this to happen, right? So why would you want to assume a reversal before it happens? There's no reason to fight the trend and just constantly be getting chopped up and stopped out, sort of thing. So instead, what I'd be doing is what I've done in my previous videos, is I've marked out, if you're looking longer term to accumulate, I've marked out buy zones. And basically, I mark those out from essentially what I've just showed you, right? So I look at those previous key levels, and my key level for Bitcoin was right around $20,000, maybe slightly below, and maybe slightly higher. But essentially, that buy zone was really just the lower range, lower 50th percentile of that range that I had drawn out. So, because if we lose this level, then I'd have to go back down to some pretty low prices. And I'm not saying that can't happen. I'm just saying that that's how I identify my buy zone. and accumulate during those opportunities that we get, which tend to be brief if there's demand at that area, right? And so you can see right now, if this was Doge, if I was looking to accumulate, that's how I would have drawn it out, and basically that would be the areas that I'm buying in, which would be in right now at this point. So an invalidation of that would be a break of this low, and maybe you have your stop loss below that and you cut your positions and then you reevaluate, or maybe you're okay on taking some of that risk because you believe that we are near the cycle bottom, but you just withhold putting in new capital, right? And so you stop accumulating until you see a new base form or until your next target is reached, wherever that might be. So that's kind of how I look at it. And essentially, I've also talked about ceilings, right? We've seen these in previous bear markets, and I've shown this in my previous video on Ethereum, but essentially is, you get down where you have basically a breakdown here, and we're going to have a continuous accumulation area below that ceiling, which is otherwise just really resistance. But below that key level of resistance is basically going to be our ceiling for potentially quite some time. We had a ceiling in Ethereum for, I think it was at least, it was like 6 months or something like that. And, we might have had rallies below, in the meantime, below it, up to the top, and then rejected multiple times, kind of thing. But in that time, smart money is accumulating and getting in long-term positions, kind of thing. And then eventually, like I said, a break. There's no reason to get bullish. Then we have a break of that upper range band. Well, it's the same thing. Whether you're taking your line from here on lower time frame or on the weekly, the theory remains the same, that you eventually want a break of that overall ceiling where you broke down from here. It's your previous range, and it's established resistance at this point. And so long as you're holding this low, right? So long as we don't dip like this, then that's, to me, that's different, right? We need to hold this low, and that's that's a break in market structure, and then you start to get a shift in the trend. So that's it for Doge. I think at this point we'll move on to Ape now. Ape's a bit more of a difficult one because we don't have as much historic price action, right? But really, just from the get-go, obviously we've got our low that was made over here that actually formed a range. So you could have said this range was the bottom band and upper band, and somewhere in here the EQ, right? So probably came up here and tested the EQ of that range at some point after breaking below and then breaking get back inside of it, but didn't even come up and test the upper band or even get really that close at all. Came up into supply over here and just broke down, which was typical of everything else that we saw as well. So for me, I do like this area here, though. I'll mark it out. I do like this green zone here. It's a potential accumulation zone for me, and that's just from this red candle here that was invalidated on June 22nd, and obviously created some sort of bullish order block, right? Tested there, support, tested here as support, and then tested again as support over here more recently. So I do like that area currently. We are definitely struggling to get past that below, get above this lower Bollinger Band range band, right? So this lower band of this range, acting as resistance. It did close above it here just briefly, so we'll get into maybe some lower time frame if I have time to look at that. But essentially, in my opinion, this is still acting as resistance, and we haven't confirmed a breakout above. But ultimately, what I'm seeing when I just zoom out is just lower highs, right? So basically lower high, and possibly a lower high forming over here somewhere. Right here, potentially, just ultimately lower highs, right? However, if we can break out of this lower time frame range right here, okay, if we can break out, then just, with typical theory here is that you extend out that same range of clone, and that gives you your target, right, for the next target, basically same distance, the same width of this range, right? So basically we're targeting it up here if we had a breakout here, okay? And then at that point, maybe we can talk about potentially breaking some market structure, right? And so obviously clearly there's lower highs, but if we can break out above that range and above this downtrend, this diagonal, then we can start to talk about potentially making a higher high, right? Ultimately, that's what we want to see, is higher highs. So Just try and keep it simple, guys. That's it for this video. Thank you so much for joining. Hope you enjoyed it, and we'll see you on the next one. Bye.